Sticking with the day's results, elevated equity market activity and the bourse's diversification strategy have bolstered the JSE's half-year performance. The exchange recorded revenue growth across most of its asset classes, attributing that performance to robust systems as well as operational processes. CEO Leila Fourie joins us now for more on that performance. Thank you so much for your time, Leila. Now, the first thing that jumped out at me is the improved quality of earnings. So just paint a picture of the composition of your earnings at this stage.
Zanati, we are delighted with the earnings. We delivered 13.2% up on NPAT, and that was really driven largely by a jump in our revenue of 11.4%, and this demonstrates our ability to perform and to deliver through the cycles. Our operating income was up 11.4%, largely off the back of a high trading volumes and good performance across other business units, and our costs on a like-for-like basis were up 5.9%, and on an overall basis we're up 7.5%. And this is demonstrating a high quality of earnings and the strength of our diversification strategy. Our cash position and our balance sheet is very strong, and we have invested very thoughtfully in modernizing our tech stack and ensuring that we've got the highest levels of system stability. So overall, I'm very pleased with the progress that we've made, and we will continue to structurally invest and improve our performance over time through innovation and partnerships.
Yeah. Well, talking about performing through the cycles, of course, we know that different cycles are really, and cyclicality is what the equity market is beholden to. But of course, something that also was highlighted is, the level of growth that you saw in terms of market activity. Just contextualize that for us as we drill deeper into this.
Zanati, you'll recall that that we hit the 100,000 point mark in our index recently, and we're very excited about that. And that's really underpinned by a bit of a rotation by some investors out of the US and looking for yield and investing in high potential markets, in emerging markets like South Africa. South Africa is screening very well, and you can see that by the results. So the JSE Limited, our own share price, is up by more than 50% since the establishment of the GNU, and it's up by more than 70% when you measure that in dollar terms. If you look at all of the listed entities across the bourse, particularly in the top 40 space and the all share space, you'll see that we up almost 22% yesterday at close of business, 21.8, versus the 15% up in the MSCI Emerging Market Index. Now, what is driving this is that firstly, there's this rotation that I mentioned. Secondly, we have increased our overall weighting in the Emerging Market Index. The FTSE Emerging Market Index closed last year at 3.1%, and we are now tracking at 3.5%, which means that international investors who follow that index, especially passively, are starting to increase their investment allocation to South Africa. So South Africa is starting to attract the attention of international investors. We have deep liquid markets, and we've invested heavily in technology and also in top-class clearing and settlement infrastructure. We've got a big balance sheet that underwrites and underpins our market, and that creates and generates confidence in our market.
And actually, just talking about, this increased appetite for South African equities and obviously the internal strategies that the JSE is undergoing. Then on listing, what is the backdrop looking like for new listings?
The backdrop is actually looking much more positive. We had a reasonably good year last year. We've had 3 listings this year, and we've got a number of listings in the pipeline, some of which are coming from NASDAQ or the London Stock Exchange. So ASP Isotopes is an inward listing from NASDAQ. Canal Plus and Neo Energy are both London Stock Exchange inbound listings. We've got Cell C potentially looking to list, Marula Mining, Fidelity, Optasia. So we have a building pipeline. This pipeline is looking more positive, but it's all very dependent on the overall confidence globally in companies and therefore willingness to invest. And then, of course, locally, confidence is a very important factor driving our listings pipeline.
Yeah. And with that more elevated listing pipeline then, just talk to us about the part that the JSE is on in terms of enhancing listing requirements.
We are extensively working on our listings work. You would be aware that we recently increased the number of fast track accredited exchanges. That means exchanges that enable where we recognize the listed company's secondary listing on our exchange. So we used to have 7, and we added another 7, largely from the Euronext stable. So that would be Paris, Dublin, Amsterdam, Brussels, Milan, Lisbon, and Oslo. And then we also officially launched in October of last year our market segmentation, which separates the board into prime and general. Yeah. The general market segment have much more cost-effective listings requirements and much more fit for purpose to enable them to raise capital, for example. And we've seen that 27% of the companies that are eligible to list in that market, 29 of them have migrated. We are also planning to bring about a much more concise and simplified set of listings requirements. These have gone through public consultation. We submitted them to the Financial Sector Conduct Authority in December of last year, and we're awaiting final sign-off, and we're looking very much forward to bringing that to the market. So this is building on a probably 5-year journey of transformation in the listings requirements and the ability of companies to raise capital. And we are certainly starting to see green shoots in that space.
All right. Well, we do have to wrap up the conversation there, Leila, but thank you so much for your time. Always appreciate it, and really looking forward to the momentum in the second half of the financial year. That was Leila Fourie, CEO of the Johannesburg Stock Exchange.